Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 312. Today is 24th of November. And today we are going to talk about the dollar index and gold correlation and how well correlated these two entities are. First, I look at the market. The market opened down, but it opened up, but came down almost in negative territory, and then it came back up, and then just kept going. IT stocks taking the lead up 2.5%. Public sector enterprises up 1.5%. Nifty itself closing up 1.2%. So most of the stocks that have been doing well in the past many weeks did not really do so well today. But the laggards or the stocks that had not been doing so well in the overall large cap space, those were the ones which did very well. So a lot of the existing current portfolios did not really match what the indices are showing. But nevertheless, a good session. We are now very close to all time highs on the Nifty. On the Sensex, they already hit a new all time high. So whenever we are hitting all time highs, there is no need for any worry of any kind, because that is an assurance that the market is perceiving good times ahead. Of course, at some point of time, all time highs become a point where the markets don't come back to for a long period. But so far, there is no indication of that happening anytime soon. In terms of the overall broader markets, you can see mid and small cap index as well as small cap 250 index up only 0.4% and 0.5%. Nifty next 50 up only 0.38%. So broader markets were a bit muted versus the Nifty. In terms of the weekend investing small cases, you can see a couple of small cases were up at 1% or more, but more or less most of these small cases were up between quarter percent and half a percent. And in fact, MI80H2, MI25, NNF10 actually losing some ground today, and that can happen sometimes. Strategies will not do a one-to-one matching with the index on a day-to-day basis, but over a longer period of time they do come around. As you can see in the heat map for the day, the major gains came from Infosys, almost 3% up, Wipro, HCL Tech, TCS, HDFC Bank, HDFC Life, BPCL, Sun Pharma, Power Grid, Tata Consumers, Hindustan Levers. These are the top gainers, and some of the top losers were Cipla and Coal India. Rest of the market was pretty much flat, as I said. Top gainers within the CNX 500 universe: Electra Green going up and down almost on a daily basis, plus 10% today. Gujarat State Petronet up 9.5%. PB Fintech, very nice move today, up 7.9%. SJVN up 7%, and Indoco Remedies up 7.1% also. Top losers: Rajesh Exports down 6%. IOB surprisingly down minus 4.5%. APL Apollo down 3%. GNFC and Polyplex also losing about 3%. So topic for the day is the dollar index. The dollar index is basically a basket of currencies: euro, Japanese yen, British pound, and Chinese yuan, and a couple of other currencies. Maybe five I think four or five currencies make up predominantly the US dollar currency index, the DXY. And this is extremely well correlated, inversely well correlated with the gold move. So I'll show you some important charts. This is the dollar index chart from earlier this year, and you can see that, while it went from mid 90s to about 114, 115 by September end, it has since then started to fade out. So the gush of money that was going towards the dollar has started to move back. And after this fall, last 2 weeks, from 113 to 105, we did have a small bounce, but again, we are seemingly going down. So if this sort of neckline of this head and shoulders formation breaks down, then we are probably looking at it retracing back to mid 90s. So once that happens, dollar index is also sort of inversely relation to money going towards risk assets. So emerging markets, commodities, these are the sectors that will perform well when the dollar index is falling. And you can see the exact inverse relation in the dollar gold price. You can see that the dollar gold also bottomed in the last week of September, just like dollar index, and is about to make this right shoulder. And if this comes through, then of course we are also looking at somewhere near $2,000 on gold to come through. So extremely well coordinated inverse relationship. And you can see that over the last 12 years, when when the dollar index is rising, you can see gold is falling. When the dollar index is flat or falling, gold is rising. And here also the dollar index is rising and gold is falling. And now this reverse is happening. So you can see a totally a 180-degree sort of a complementarity between the two, and that is a beautiful thing to see on a chart. More insights today than anything else. So first insight is on active versus passive fund flows. So you can see this amazing chart where passive flows have gone up exponentially in the US market, and whereas active funds somewhat plateaued around 2012 13 and are going down. So this is important because this is a trend that will probably get followed in India also, and we are just about seeing the takeoff of passive funds here, and active is very much active. But at some point of time in this next decade, I think we will see passive funds go up much further. So passive funds like ETFs, index investing, these are the formats which will go up. So even small cases built on index like structures, these will be somewhat sort of a passive allocations, and this will take off in a big way. PSU banks continue to rule strong. You can see here that after bottoming near 1000 in 2020, CNX PSU bank index is nearly at 4000, so almost 300% gain from there. And we are very close to coming to this resistance somewhere around 4400, another 5 to 10% to go. And I think there, after that, maybe a sort of a period of rest or sideways consolidation, because the run up has been too fast too soon. Since May 2020, you can see 270% gain on PSU bank index, whereas the rest of the market has gained 104%. One more insight was there in terms of very recently we did a study on what are the chances of making a loss in Nifty index, and you saw that within 5 to 7 years, if you continue to stay invested in Nifty, there was zero chance of making losses in Nifty based on the last 20 years of data. Now, if we extend the same logic to the Nifty Next 50 index, which is the next 50 stocks after Nifty, you can see that within 5 years you achieve that rolling return point where there is no chance of making a loss, especially in the last 12 years of data that we have studied. So if you were invested for 1 year, there was a 24% chance that you would have made losses, 76% chance you would have made gains. Within 3 years, that probability of making gains went up to almost 93%. Now, one step ahead from this, if we are invested in a strategy like NNF10 based on Nifty Next 50 index, then you can see that within 1 year, the chance of making money goes up to almost 83%. And within 3 years, it goes to 100% based on the data of last 12 years. And within 5 years, of course, it is 100%. So you can improve on Nifty returns by going to Nifty Next 50, and you can improve on Nifty Next 50 by going to a strategy like NNF10. So this is the sort of insight from there. Another insight is on behavioral aspects. This is an example that I've given many times, but always good to repeat this. Peter Lynch, who ran the Magellan Fund in the 1980s, he was named the best fund manager in the US for having some CAGR of 20-25% for almost 13 years. And despite that enormous return, the average investor in the Magellan Fund didn't make money. Why is that? Because people make all kinds of mistakes despite following the best managers, despite being in the best vehicles possible. They will tend to bring in a lot of money at the tops. They will tend to take out a lot of money at the bottoms. They will try to time the market. They will go in and out of the products. They will stop their sips. They will incoherently, reduce the sip quantities or increase the sip quantities at the tops. All kinds of things to disturb the disciplined flow of investing that would have given them these returns are possible because of our minds which are restless and who want to do something better than the fund manager, even though he may be giving you world class returns. So the takeaway from this is Once you are inside a bus, please allow the driver to drive, and you should sit and relax while you enjoy the journey. The decision making process is something that is the most important part of anybody's investing journey. How you are making decisions, and in what shape of or state of mind are you making these decisions. So what we see is that buy and sell decisions, which are the most important decisions in your investing journey, are to be taken when you're emotionless. How many times you look at your own record and see what are the decisions that you took in the last 2 years, and in what state of mind did you take those decisions. Note them down every day whenever you're taking a decision. What is my state of mind when I took that decision? You will find that more often than not you are taking decisions when you are either very very greedy or very very fearful. And everybody makes those mistakes. I have made those cardinal mistakes hundreds of times, and it is practically impossible to get rid of these mistakes, but you, with practice, you can reduce them to a dramatic impact, effect in your investing. So with time, if you keep practicing that, no, I have to take a decision based on my rules, based on something that I'm following, based on the structure of my investing, and not because I'm feeling that this may go up or this may go down, or I am fearful of what may happen in overseas market, so it will happen in India also. All those kind of things, fears that we keep getting bombarded from by the media, by our friends, by what we read, all that should be taken aside and followed only in a very very systematic and non-emotionless manner, and you will see that that will really bring a tremendous amount of change and improvement in your investing journey. So once again, if you like the content, please give it a thumbs up. Please subscribe to the channel. And most importantly, please do share it with one person who you think can make use of this information if you like the content. Uh, Other than that, I have no other request to make to you. Thank you so much for being a visitor and a weekend investor, and for following this channel. Thank you so much. Bye.